Hi, I'm Rohan Mehta, CEO and Portfolio Manager of Turtle Wealth. We are a registered PMS company managing more than $1 million, $100 million fund. When it comes turtle, people generally remembers this turtle slow and steady, but turtle is not tortoise. Turtles are fast and consistent, and we are that in equities. Our investment philosophy happens to be with a very unique process which has been back tested by nearly about 15 to 50 years of markets, and that is triple P, that is price, profits, and people. Our all funds are with the name of 212 degree. 212 degrees, 211 degree Fahrenheit water gets hot, and 212-degree water gets boiled, and 1 degree can change the whole concept about life or equity markets. For us, that 1 degree is our process, and our process is just to make the fund, the stock selection so crystal clear that we as a fund manager also doesn't have a problem of emotionally investing or not investing into that stock. So triple P, I'll talk a bit about our triple P process. Our triple P process, first, the theme of our investments are to buy a turnaround business. So how we find this by three attributes. First is getting a stock which is a consolidation of more than 10 to 15 years of price and breaking around an all-time high. Also, the stock should be into 52-week high, 52-week structure of outperforming a Nifty 500, which is our benchmark index, and also its sectorial index. Like for example, if I'm talking for a stock like M&M, it should outperform Nifty 500 and Nifty Auto Index both together. After this, we come to the business side, that is profits, looking forward for leadership into Wealth Mantra Fund and looking forward for turnaround businesses into mid to segment into Growth Mantra Fund. We look forward for the businesses, profits, everything to where the company is doing a turnaround, where last 10 to 15 years company didn't do anything good, and what is the turnaround which is happening into the business. And if we like the business and if we like the numbers and the profitability, we only invest into company which does an all-time high pat. And then after that, we talk with the management of the company, and that's where we get more sink into the teeth and the skin of the company. Why the things are happening, what are the 5 years vision, and after this 3P business, if we like the company, then only we invest into the company. So just understand, the stock has to be an all-time high profit, superior business, purely a turnaround business, and at the end of the day, the management also should be extremely sink into the game of the company. And then we have an attributes of, we only invest into human friendly businesses, so we don't invest into the companies which are animal killing, liquor, tobacco or leather, or and it has to be ESG compliant. So we want to invest into the company which really makes a huge difference into the economical and environmental point of view for everybody across, and we don't want to just participate onto the lust of making profits, and that's what our tagline is about. It's beyond profits. And now, finding this type of businesses are extremely tough. Honestly, it's not very easy. And the beauty about this, all businesses are that whenever we invest, before that we decide when to exit in a stock, and that's one of the most beautiful thing. Very few fund houses does this, and that's where our uniqueness comes into the picture. We are extremely clear of allocating the fund as per the risk appetite of the portfolio. We don't take more than 1.2% of the loss risk in a stock, and that's where if we go into a wrong idea also, we lost only 1.2% of an average portfolio of a fund. And that's where we don't have a model portfolio concept in a portfolio. When a new client comes into the picture, we have portfolios where most of the stocks are same, but the allocation goes changes as per the timing of the markets, and we don't know when to invest and when to exit. But the best time is when you invest, and that's how we have seen from a longer period of time. And what we have seen in last 2 3 quarters has been an extremely change of the of sectorial index. Like we have started investing to PSUs, autos, manufacturing, infrastructure, and that's where a great value lies into the picture. IT services we had exited 2 years back, and now we have seen that IT has been the biggest underperformer, but still there are certain IT very selected companies which are still doing very good. So our theme basically for the next 4 to 5 years is that we are into the head of the biggest bull run of the market, and that's where two of the companies, so in large cap to mid cap, these companies which are into the zone of turnaround businesses, where we will give high allocation, where the tenure of the investments are good, but the marginal of the profit is not that high as we look forward for into the company, which is into the zone of 1000 crore to 5000 crore of market cap, where our allocation maybe will go lower, but the margin of the profitability what we will create in next 4 to 5 years could be a 10x to 50x onto the stock, individual stock. That's what growth we are seeing into the range of 1000 crore to 5000 crore of company profitability, company's market cap. So that's what we are at Turtle. We're looking forward for businesses which are purely turnaround. We are purely agnostic onto the market cap, sectorial, or maybe any of the businesses to look forward for. Our only focus is to buy and turn around businesses which are human friendly and which are purely database. At Turtle, we have a saying that, in God we trust, why rest everything is data. So let us keep data onto the picture. And we are very clear that we get out onto the underperformance and we give money more to the outperformers. And that's where the alpha will be created for a very clear point of time. So if you're looking forward for anything which is very quant based, very strategic based, and not very emotional based, I think so one of the biggest fund house to look forward for is Turtle Wealth, where we are very onto very clear onto the point that at the end of the day, data wins and the process wins in front of a person. Also, we are onto the theme of being the fittest fund house of India, because we all talk about longer term wealth creation, but how your portfolio manager is fit. You can see my BMI, you can see the things across, and that's what we create, because we are not here for creating a 6 to 7 months or a 2 years of a wealth creation process. We are here for at least a decade point of time, and this is the best time of this decade to create wealth for. We are nearly about being 21 months of the underperformer time in Nifty and Nifty 500, and that's where the whole value will be created, because the bigger the consolidation, the bigger is the win size, and the bigger is the win size, the bigger is the consolidation. So most of the time people feel that it's the bull market where you should invest, or it's the bear market which you should invest. We always recommend that it's the big market where one should invest, because people will lose out that patience, and that's where the whole crux of finding a great gem will come into the picture. It's not the bear market where you find great companies, it's not the bull market where you find great companies, it's the big markets where you find great companies, because that's where it outperforms markets, the numbers shows for itself, and then the bull market takes it to another higher growth level. Also, our criteria is to find turnaround businesses. That doesn't mean to not invest into good quality companies, but the quality companies also which has not performed for a longer period of time, and which has started to take U-turn into the business. So there are certain companies like TVS Motors being the fourth largest two-wheeler company, two-wheeler manufacturer, but still has been the biggest performer in last 1 year in comparison of Hero, Honda, and Bajaj Auto. So that's where lies very clear point that we don't have any favoritism stock. Our favoritism is where it outperforms markets, because we always say at Turtle that we don't love companies, we love our clients, and that's where the whole money comes from the picture. So that's a very unique clear process about investing with Turtle Wealth, and that's what is all about it. So if you are interested to look forward for this type of strategy where fund manager only invest into an all-time high company, all-time high profitability. So I'll give you a picture, like companies like several companies like Yes Banks, or companies like Gland Pharma. This will come in picture anytime in our portfolio, because these companies are not at all-time high profits, or it's not all-time high price. And of course, if this both doesn't come, eventually at the end of the day, the company doesn't have a we don't go to management only to meet, because if these two are not clear into their number side, we don't go to the management to meet. So we have very curated portfolio of 12 to 15 companies in two of the portfolio. We also drive a bespoke portfolio where the ticket size is higher. We look forward for investing into very specific ideas as per the client's risk appetite and our conviction onto the stock. And also we have a very unique proposal of investing very differently in top up funds. Like generally we invest into top up funds which are on an average portfolio, as a model portfolio. We have a unique way of investing only to the companies which are doing high growth. So very unique created fund, clearly quant fund, where you can sleep peacefully as a fund manager, I can sleep peacefully, and we all can create wealth for each other for a longer period of time. Have a great day.